Hello everyone, this is Martin. Welcome back to another weekly video. We're going to be looking at how to find trading opportunities for this coming week, August the 27th to the 31st. And welcome to all the new subscribers from around the world, and also a big hello to all my friends and traders right here in Canada. So now last week we had 8 winning trades and only 2 small losing trades. In fact, the losing trades amount to under 30 pips. So that's really small and did not impact anything. However, the big winning trades, we won a total of, let me just take a look here, 623 pips. That includes the losers. However, there's a further 76 pips on one particular currency pair, and I'll talk to you about that in just a minute. So it's a really good trading week, and for this week we're going to do something that's totally different. Even though I'm going to give you some trading levels and ideas for this coming week, I'm really going to concentrate on what happened last week and to show you my thought process. I'm going to explain that. So what happens after I give you my price levels and you review my video, this is what you should be thinking about, or well, at least I'm going to explain how I think and how I take the trades and what I do with the information I provide you on a weekly basis. So if you can gain any information from that, it'll help you become a better trader. Okay, so before we can do that, we're going to go on to the next slide. Okay, really quickly, this is my risk disclaimer, and always review this first. The videos I produce is for educational purposes. Always trade at your own risk, especially if you're using real live money, okay? And remember, never trade with more than 1 to 2% of your entire account balance. So when I say that, I mean never risk more than losing 1 to 2%. I mean, that's the maximum amount of money you should risk on any trade that you open, okay? Okay, like I said, we're going to review last week's trades. I'll show you on this pair here. We're looking at the Euro USD daily chart, and this was good for 148 pips based on my last week's recommendation. Okay, now the first thing I want to explain is that I did not change these levels. You see these levels right here, okay? This level was for if price goes higher. You know, it's intended to say buy above 114.57. If you think price is going to go lower, then sell below 112.76. I actually did not change anything in this video. I did not even move these levels. These are exactly as they are shown on last week's video, and I want you to go back to last week's video on YouTube, review that, and see if I have changed these or not. I'm telling you guys, I've not done anything. I've kept everything the same. And the other thing is, I do not have price levels for this week. In fact, when we go through the currency pairs, you're going to help me out. I'm going to ask you a couple of simple questions, and we're going to determine where this week's levels are, okay, to help you get into some good trade opportunities. So for last week, I said buy above 114.57. You can see what happened. Last week's video, when I produced the video, I did not see anything to the right side of this red line. I did not see that, and I said to buy above 114.57. And guys, take a look. I normally do not trade on the Sunday Monday, so this very first candle after this red line, that's the end of Monday trading, okay? And at 5 p.m. Eastern Standard Time here in Toronto, Canada, you could have opened a position or prior to that and had a buy stop level above 114.57. If you would have had your trade entry there, you would have made the next day. See, Tuesday went really up high, really good. Wednesday went up here. If you would have held onto your trade, you could have made up to this level right here, okay? And your stop by entering right there, okay, on this day, your stop would have been below this candle right here. So this would have been a great, easily 1-to-1 risk reward, and you would have made 148 pips on this particular trade. Okay, so let's move to the next one. The next pair is the British Pound USD. Now, this was a small loser. My thought process was this. I did tell you about a reversal, okay? I did say that price was going to reverse higher, and I said to look at buys above 128.56. Now, remember, this is the label, this is the price level I had on my last week's video. Again, go to last week's video and see that I have not changed these levels. So this is for your review for this week to show you what my thought process was. And after this candle right here, on the Sunday, Monday closing, Eastern Standard Time, right here, I would have placed already a buy stop right there at 128.56. And for that Tuesday, that candle went higher, and you would have been in profit. However, my stop loss would have been below, the aggressive stop loss below that, let me just remove that, below this candle right here, okay? My entry right there, so my stop loss there just below the candle, would have made a profit. However, letting the aggressive trader lets their trades run longer to see if they can make more money. You can see on a Thursday we had a big black bearish candle right there, and it came down but did not close below this white candle, right? And did not certainly close below this stop loss. So if you would have kept your trade open on Friday, it went up just a wee bit. On this one, you would have only, on the end of Friday, you would be down minus 12 pips. So just a very, very small loss, minus 12 pips. Okay, and for this week, I would look at a buy above here for price to go higher. Okay, if you think price is going to go lower, then I would still wait for price to go below this level right around there. Okay, so that's for the British Pound USD. Let me just take that off quickly. I'll go back to the Euro USD because I did not have my price levels for this week. I would not be looking at buy trades, just for the fact that we are at resistance. You see this line right here, and also this dash line. So this is resistance, so no trades until you get above here. Okay, and for sells, you want to take a sell below here. Price was going to reverse down. Okay, so now we get to the Australian USD. Let's take a look. Okay, for this one, remember, I did not see anything to the right side of this red line last week, and I did say buy above 0.7326. And now the candles are coming right over this level, because remember, I did not remove these labels here, or these price levels, for this video. Okay, normally I would have new levels for you, but this is right from last week's video. So I just want to prove to you that, you know, a lot of my trade ideas work out to be really good trades. Now, I said buy above 0.7323, and right there, you see, okay, or I'm sorry, buy above 0.7326, and you would have made 40 pips. Now, here's my thought process. Enter right there. Let me just get the line. Okay, entry right there on the even if you're not trading on the, see this first bullish candle, that's the Sunday, Monday close. Even if you're not trading, then you would have taken a trade just right there. And on the Tuesday's trading, price went all the way up to touch or retest this trend line. Okay, you can see I've drawn that and carried that over to the right side, and I would have gotten out right there. I'll tell you why. Here's my thought process. Get out after the one day on Tuesday it went up, just because we are at resistance here. Firstly, the trend line, the lower trend line of this channel, and then secondly, this, you see this blue area right here, that zone is also a major resistance. So thinking that price goes up here, price could come down. Anyways, I would have had peace of mind, taken the trade off the table, and you would have made 40 pips. Okay, so now we're going to move on to, the continuation for this week. Price would have to come above here for me to think about taking a buy trade. So buy trade above this area, okay, above this area for buy trade. And for sell trade, I would have to be just below here for a sell trade if you're thinking that price is going to go lower. Okay, now let's go on to the next one, gold. Really quickly, you can see gold. I also did talk about this turnaround right here in the previous week. Actually, let me do something. This line should really be about should be there. So I did not see last week this over here, okay, and I did talk about this turnaround in the previous video. So price did turn around and it went higher, and now it looks like it's going higher. However, drawn in these two blue lines, you can see that right here, okay, and we are coming into resistance again. So there's not much room to move there. So if you're thinking of taking a buy trade, and you certainly could, it could only come up to test this previous resistance here. So just keep that in mind, okay, for those people who want to take a buy trade. Now, let's take that off. Let's go to the New Zealand USD. Okay, take a look. Price is now turned around, just like the other pairs. It's going higher. And last week I said take a buy above 0.6644. Okay, and you can see on the Sunday, Monday close, it was a doji. I would have had just above there, just above the high of the doji, above 0.6644. I would have had a buy stop position, a pending buy stop or buy trade there pending, right? Placed already there. And price, you can see on Tuesday went up all the way to here, and then on Wednesday went up even higher, and you could have actually had a profit target down here somewhere, but waiting for your candle close, you still would have been made a little bit more profit, and that was good. The New Zealand USD chart for 44 pips. So again, that's my thought process there. Now, once price came, I would have taken off my trade right here with this. See the high wick or the high shadow here, or the upper line here. Okay, I would have, even though you're in profit at this point by about 44 pips, I would have taken the trade off the table, and the reason was because there was rejection here. You see this long tail above this little body. So it's kind of a doji, but it's a bearish looking candle, and you take your profits off the table, and you would have avoided this big black candle on the Thursday, but on Friday went right back up again, and I believe it's going to go higher again. But again, take a look at the trend line and this blue zone, that is resistance. So if it's going to go higher, it's only going to go higher by a bit, okay? For a sell trade, if you think price is going to go lower, and I don't think it will, you'd have to look at sells below this area here, okay? Now we move on to the next one, US CAD. These are the levels I had on my chart last week. I did not move them, and you can see I did not see this these candles to the right of this red line, and you can see on Sunday, Monday's trading, Tuesday, Wednesday, Thursday, Friday, just going sideways here. Take a look. The blue line is right on the 0 level, so it's sideways trading. The histo bars here on this trending indicator, this is the trending indicator, they're very small. There's no trend here right now. For the US CAD, we're going sideways, and last week there were no trade opportunities. I had these levels on last week. You can see price never went below here or never went above here. So there was no trade opportunities last week at all. For this week, you could keep on the same levels as well. For buy trade, look for buys above 130, 175, so that stays intact. And for sells below 129.74. Okay, that's for the US CAD. So just going sideways. Oil is going higher, which means that possibly this pair here, the previous US CAD, may come down lower. Okay, so if oil is strengthening, that's good for the Canadian dollar, which means this pair, the US CAD, may come down lower. So oil seems to be going higher. However, again, take a look. We've got major resistance right there. See, with the highs of these candles and here. So if it's going to go higher, and I believe it could go higher, it's most likely to about there, and then come back down again. So it could bounce off of there. Okay, that's oil. Let's go on to US Swiss franc. I've got the levels on here from last week again, guys. Did not see this, and you can see price did come down. I did mention to you in last week's video, look for sells below 0.9860, and in fact this was good for only 28 pips, but still it was good. If you would have held on to your trade, price did go back up on a Thursday. See this white candle, but holding on to your trade, thinking that price would come down still lower, and it possibly could down to here. On the Friday's close, it's a doji. You can see the little black body with the tail, upper tail, lower tail. So really closed the same level as this Wednesday's trading right here, this Wednesday candle. So you still would have made, by holding on to the trade, if you're an aggressive trader, you still would have made 28 pips, but now we're into the next week. Okay, so let's take a look at the next pair. And again, I'm sorry, before I continue, if you think price is going to go lower, I would look at sells below here, sells below here. And for buys, I look for buys above 0.9860. Okay, so we can keep that intact there. Okay. Now we got the US Japanese yen. Okay, so take a look here. And by the way, all these blue lines I've kept on from on the charts for this week. They are from last week's chart. Again, you can go back to last week and see that I have not moved anything. I've not moved the price levels from last week, and I've not moved these bars. I mean these trend lines for all the charts. Okay, so did not see this last week when I made my recommendations. I said buy above 111.34, okay, and sell below 109.66. Now, this ended up being a bit of a losing trade. I'll tell you why. Okay, so we had a turnaround, okay, had a turnaround, right? Price went higher, and you see after this white candle on Wednesday's trading, I would have put in a buy stop according to my last week's video above 111.34. Now, Thursday's trading, we had a huge up day, and if you want to wait, you would have placed a buy order, a pending buy order just above here, right? However, on the Friday, you can see we had price to go up, would have taken your trade, and then closed a little bit bearish with a bearish doji. You see that black bearish doji? Okay, so a buy above, if you would have taken, based on my recommendation, a buy above 111.34, you would have on Friday ended up with a teeny loss, and the loss is only about 10 pips. So that's the second loss for the week, as I mentioned, and the total losses are only about 23, 25 pips. However, we had some huge winners, okay? So for this week, same thing. Look at this time buy above here, okay? If you think price is going to go higher, and I don't have any sell recommendations for this pair. Well, you could look at sells below this level for sell, okay? That would be sell. So buy above here, sell here. Okay, now let's move on. And after we get the US Japanese, we get the Euro, British Pound. This was a huge money maker last week, guys. I actually made money on this one. And take a look. I did not see last week's video. I did not see this here at all, but I did have this price level, okay? And I said look for buys above 0.8977. So right after the end of Monday's trading, I would have had a pending buy stop above, right there, above 89.77. Okay, on the Tuesday's trading, we had a bit of a bearish day. It's a doji, you can see, but it had a long upper tail, bottom tail here, just a tiny little black candle body. Okay, so sellers, basically there's there's a consensus between the sellers and buyers that not much is going to happen. But then we had a bit of a bullish up day on the Wednesday, and by holding on to the trade, and again, then you would have made your money on the Thursday. Holding on to your trade, you would have made your money on the Friday as well. So this one, guys, was good, was amazing for 66 pips in total by just having a buy order right there after placing that after the end of Monday's trading, Eastern Standard Time. Okay, and your time zone, it's a little bit different. And you can also drill down to a 4-hour chart to see if you can get in at a better entry as well. But anyways, that's what happened last week. And again, on Tuesday, like I said, by having a trade on the Tuesday right here with this doji, this bit of a bearish doji, if you would have taken your trade, you would have been in a bit of a loss, but holding on to it on Wednesday, you would have been even right there with this white little candle. On Thursday, you would have started to make money. On Friday, you would have made a lot more money added to Thursday's total. Okay, so that was the Euro British Pound, and it gets better, guys. Take a look at Euro JPY. This was the big trade of last week, the big money maker. In total, you could have made 210 pips if you were to hold on to your winning trade. So what happened? Okay, so I did not see any of these candles, right? I made my video and I had this level put on 127.12. That means I'm suggesting look at buys above 127.12. So what happened on the Monday close, the candle right here? Well, it's a little bit of a bearish candle, right? Okay. Now, at this point, and this is how you would trade my trade ideas. At this point, even though it's a bearish candle, you can always put in a pending buy stop above this level, 127.12. So even though on Monday's close, you see the candle here, prepare yourself again and put in a buy stop here. And guess what? Here, price started here and went all the way up. You already would have been in a winning position. You already would have had a winner. Then then holding your trade open, and I certainly would do that. Why? Because first of all, this candle closed above this speed line, okay? And if there's a pullback, and this is called a pullback, guys, okay? So this is a counter trend move. If this trade is going to go higher, it's going to go to at least here, this blue zone. I want you to understand that. So holding onto your trade, you would have made up to here, and you would have made at that point then 114 pips from here, from your entry to here. Your stop loss would have been here. Okay, so great 1-to-1, and that's if you're a conservative trader. So if you're a conservative trader, you would get out like right here. Okay, you could have had a profit target of right there as well. But anyways, you would if you're a conservative trader, you get out of your trade, you get out with some really good profits of 114 pips. However, if you're an aggressive trader, you can keep your trade open, and guess what happened? It priced, the candle went up to test this dash blue line, which is the 89 EMA. So you would have made a further 60 something pips for a total of 210 pips. So this was the big moneymaker last week, okay? And that's my thought process. So if you're at resistance, you take your trade off the table with profits if you're in profit. And if you're an aggressive trader, you perhaps take off half of your trade, half of your trade in profits, keep the other half open. Okay, always take profits, but keep the other half open and watch your trade run higher if it's going to go higher. In this case, it did to test this dash blue line. Okay, so that's my thought process for this week. Buys above here if you think price is going to go higher, to test at least here. Okay, and if you think price is going to go lower, you'd have to wait, guys, for price to come below 127.12. Okay, that is the Euro Japanese yen. Now we get to the Euro Audi, another huge money maker. Did not see these candles last week when I produced a video. Again, go back to last week's video and review it, and you will see that I had these levels put in for this week's convenience, right? For your convenience. So it price after here on Tuesday, price went up and closed above the dash line. Okay, and I would have already put in a pending buy stop above 157.55 on Wednesday's trading price. You would have been hit. You would have opened your trade if you would have had the pending order there, and guess what? You already would have been in a little bit of profit. And on Thursday, price rocketed up all the way to here, closed here, right? And that was on the Thursday, and by that time, you would have been up 151 pips. So this was the second biggest money maker last week. And here's my thought process. If you would have been in this trade from here and made your profits up to here, I would have taken the trade off the table. Why, guys? This is important because this candle is too big. It's a huge candle. The likelihood of price continuing to go up like that from here is not great. So I would have been happy at that point in time to take off 151 pips. Okay, or if you're a super aggressive trader, again, take half of your profits off and let the other half run. But then you would have on Friday the candle came down, and I believe price eventually could still go higher, right? But on Friday, if you would have had your trade open, you would have lost some of that big, huge move that happened on the Thursday. Okay, so there's my thought process and my levels. Let me just take that off. So for this week, you'd have to look at you would wait for one bullish candle. Wait for one bullish candle, then get in right away. Price could go higher. Okay. For a sell trade, you'd have to wait for sells below. I wouldn't, not even below here. This is support right here, guys. Look, see this blue line, blue dash line, the blue zone. I mean, that's support. I don't really have a sell recommendation for this pair, so you would just have to wait and see. Okay, and finally, our last one. It was just a small winner. That's the British pound JP. You can see we had a turnaround again. This was okay. We had a turnaround with this candle right here. Okay, there's a big clue. There's a big momentum candle closed above the speed line. After this candle on Tuesday's trading, the Tuesday's close Eastern Standard Time, I would have had my a buy stop pending above 142.55. That would have been placed on Wednesday. Went up a little bit, holding on to the trade because my stop loss. See, my stop loss is down here below this candle. So if I'm getting in right there, okay, there's lots of room for safety. Okay, and price, you can see, never went down. It continued to go higher on the Friday, and this would have been good for just about 34 pips. So my thought process is, let me just take that off. If you're into a trade right here on and you open up your trade with Wednesday's candle, this white candle right here, keep it open. Thursday, your stop loss would have been here. Price never did go down, but on Thursday's close, it's a very small little bearish candle. You can see bearish doji with a little tail above here, and that shows me that buyers are still in control. Buyers came in with strength right here, big, huge buying momentum right here with this big candle. Buyers want to push it a little higher. Sellers tried to bring it down. However, it ended up being a doji, and my thought process would have been, well, price is going to go higher. I'm surprised that price didn't go higher, at least to test this blue area, this support. So, but anyways, it ended up being about 34 pips. Okay, so that's what's going on for this week. Again, same thing. If you think price is going to go higher, watch out. We have the resistance right there. Okay, with the blue zone. And for sells, again, this stays intact. You would look at sells below 139.68. So hopefully, guys, that explains my thought process and gives some ideas of how I trade. Okay, if you want any more information and you want a free 33-page ebook, email me. My name is Martin at mskyj007@gmail.com. Okay, and you always remember, watch me on YouTube. If you haven't subscribed to my channel, make sure you click on the subscribe button, and make sure, please, I really appreciate this, click on the like button below the YouTube video, because that's going to help me move forward and spread the word out to many other traders who, like you, are hopefully enjoying the video and gaining some really good information. So take care, everyone. Happy trading. We'll talk to you again next week. Bye for now.